Well, there's also been a lot of talk in the tax plan about potential cuts to the popular mortgage deduction. But there's an even bigger cut in the House tax plan that could hit affordable housing pretty hard. Diana Olick is in Washington tonight.
America desperately needs more affordable rental housing. But buildings like these are less lucrative for developers than fancy buildings like these, which command much higher rents. That's why the government entices developers to build low-income housing with a tax credit and something called private activity bonds, which are tax-free.
Multifamily affordable housing that then gets a loan at a below-market interest rate because there's a tax exemption.
But the House tax bill wipes out the bonds, which also hurts developers' ability to get the low-income housing tax credits, because the two are linked. Without the bonds, developers will have little incentive to build thousands of affordable apartments.
The bonds access the credits, but together it's 50%, it's 50,000 units, it's 50,000 households that will go without this really critically needed affordable housing. Families, seniors, veterans, homeless people, people with special needs are all going to be denied this housing. It's a devastating reduction.
Republicans back the cut, saying the federal government should not subsidize the borrowing costs of private businesses. This as the Trump administration touts public-private partnerships in both housing and infrastructure, which the bonds support. Housing advocates in Texas and Florida are condemning the cut, saying these bonds are needed to repair and rebuild housing after Hurricanes Harvey and Irma. Losing these bonds could reduce the supply of affordable housing by 1 million units over the next decade, according to one accounting firm. This as the supply of low-priced homes for sale is at a record low. For Nightly Business Report, I'm Diana Olick in Washington.